Picture this. You've been clearing out the garage, flipping a few bits of clothing and old gadgets on eBay and Marketplace for some extra cash. It feels like harmless pocket money. But there's a line where the ATO stops seeing that as a hobby and starts treating it as a taxable business. And today I'm going to show you exactly where that line sits so you never get caught out. Here's the number most casual sellers never hear about. For the 2018-19 to 2025-26 financial years, the ATO has required eBay to hand over your seller data once your annual turnover crosses $12,000, down from earlier thresholds of $20,000 and then $10,000. So if your sales are anywhere near $10,000 to $12,000 a year, there's a good chance you're already on the ATO's radar. And here's the part most people get wrong about what that actually means. Let me show you why this matters in real dollars. Say you're on the lower end, a couple of thousand in profit on top of your wage. That's a few $100s in tax. In the middle, imagine you earn $60,000 from your job and make $5,000 profit reselling. On ATO 2024-25 rates, that profit is taxed at about 34.5%, so roughly $1,725 on money you thought was tax-free. And if you're running a bigger operation, the bill scales right up with it. Ignore it for years and the ATO can add back tax, penalties and interest on income you've already spent. If you've never thought about which side of this line you're on, that's completely normal because nobody hands you a rulebook when you start selling online. So your first move is simple. Head to the ATO's Starting Your Own Business section and read the criteria, focusing on 3 things. Whether you intend to make a profit, how regularly you sell, and whether you're buying items specifically to resell. Then list your last 12 months of activity and hold it up honestly against those indicators. Here's the line the ATO actually draws. If you're just selling your own personal items, decluttering the wardrobe, offloading an old TV, that's generally a hobby with no income tax, no ABN, and no GST registration required. But the moment you start regularly buying things with the plan to resell them for profit, you've likely become a sole trader business, and all of that profit becomes taxable income in your personal return. Now, here's the honest part I want to be upfront about. This isn't always black and white. If you occasionally sell a personal item at a profit, that's usually still fine. It's the pattern of buying to resell that tips you over. If you're not sure which side you're on, that gray zone is exactly where a quick chat with a registered tax agent pays for itself. Once you know you're running a business, the next step is to fold it into your tax planning so tax time is never a shock. Export your total sales and fees from eBay and Marketplace, then subtract what you paid for the items and your postage. That gives you your net profit. Find your total income bracket on the ATO 2024-25 rates table. Multiply your profit by your marginal rate plus the 2% Medicare levy, and quietly set that amount aside in a separate account. But here's the number that actually catches people off guard, and it's coming up next. The key thing to understand is that the tax-free threshold applies to your total income, not each source separately. On ATO 2024-25 figures, you pay 0 income tax up to $18,200 in total. Above that, the rates step up to 19%, then 32.5%, then 37%, then 45% with a 2% Medicare levy kicking in above $23,365. So your side hustle profit sits on top of your wage. It's taxed at whatever rate your last dollar of income falls into. Now for actually declaring it, which is more straightforward than you might expect. Link your ATO account to MyGov if you haven't already. Log into ATO Online Services and in the income section add a sole trader business schedule. Enter your gross online selling income and your deductible expenses, things like platform fees, postage and packaging, and the system works out your net profit for you. Keep reasonable records to back it all up because that's what protects you if the ATO ever asks. There's one more trap that catches people selling higher value items, and it's coming up on collectibles. On ATO guidance, capital gains tax can apply to collectibles like art, rare coins, or limited editions that you bought for more than $500. So if you pick up a collectible for $600 and later sell it for $1,600, that $1,000 gain can be assessable, and it's counted separately from your everyday reselling profit. Track the purchase and sale prices on anything over $500 so you're never scrambling later. Here's where ignoring this quietly compounds against you. On modeling using ATO 2024-25 rates, $4,000 of profit a year over 10 years is $40,000 with roughly $13,800 in unpaid tax. Add a 25% shortfall penalty and years of interest and the total can push past $19,000 or $20,000, all on money you spent long ago. The good news is that declaring it as you go, year by year, keeps that number tiny and predictable. Now let me bust the biggest myth of all, because almost everyone believes it. The idea that selling under $10,000 means you owe no tax is simply wrong. According to the ATO, you must declare all income from business activities from the very first dollar. There is no magic sales figure that makes it tax-free. Those $10,000 to $12,000 numbers are just the point where eBay has to hand your data over. They're about reporting, not about whether you owe tax. Two very different things. The second thing people quietly assume is that the ATO will never notice a handful of online sales. But here's the reality. Platforms and payment processors can report your gross turnover, not just your profit. That means the ATO sees your total sales figures even if you never registered a business. If that data looks like business-like trading and it doesn't match your return, they can go back and amend past years, then add penalties and interest. It's far easier to get ahead of it now. Let's run it back so you've got it clear. First, work out whether your selling is a hobby or a business. Second, know the line between decluttering your own stuff and buying to resell. Third, estimate your net profit and set the tax aside as you go. Fourth, declare it through ATO online as a sole trader. And fifth, keep an eye on capital gains tax for any collectibles you bought for over $500. 5 steps, and you're completely in the clear. If you've made it this far, you now understand something most casual sellers genuinely don't: exactly where the line sits between a hobby and a taxable side hustle. Your one action today is simple: pull up your last 12 months of sales and see which side of that line you're really on. Just remember, this is general information, not tax advice. Your situation is your own, so check with a registered tax agent or the ATO before you lodge. And if you want to keep more of what you earn, next I'll show you how to claim deductions as a sole trader without triggering an audit. I'm Sophie. I'll see you there.